All right, guys, so today we're going to be going over how to effectively close an equity protection appointment. And this actually used to be my least favorite type of appointment and what I struggled with the most, but it's actually become my favorite now. The reason being is 85% of agents do not know how to properly pitch it. So if you guys can get really good at this, know how to properly pitch equity protection, know how to help older clients with it, you have an advantage over most insurance agents.
Hello?
Mary?
Yes?
Mary, it's Jonah. Giving you a quick call here. I work with the brokerage and we handle the mortgage protection for Chase. Mary, your file associated with the property on 123 Main Street just came across my desk and showing me here as incomplete. The only reason for that, sometime around when you closed with Chase, we sent you several things in the mail about the mortgage protection, right? Pays out the home if you get sick or pass away. And you actually did the right thing. I mean, you filled out the card and you mailed it back to us. But for some reason here on our end, we haven't gotten that completed. And I'm the manager here in the area, Mary. So I just want to make sure we took care of you. Now, is it just you in the home, or is there a significant other or spouse with you?
Oh, it's just me in the home.
Perfect. All right, Mary. Well, if you can grab a pen and paper for me real quick, should take about 5 minutes or so to get this knocked out.
Okay, give me one moment to find one.
Perfect. And let me know when you have that pen and paper handy.
Okay, I'm ready.
Okay, great. And Mary, is this your first time going through the mortgage protection process, or have you been through this process before?
Yes, this is my first time.
Okay, gotcha. Well, Mary, it's pretty simple. Basically, I'm going to spend about 2 minutes asking some health, some financial questions. Based on that, Mary, it's simply my job as the medical underwriter to run it through the companies available in the state of Illinois that offer the mortgage protection. The reason for that is basically to figure out some various options that you will hopefully qualify for. Then, God willing, we are able to figure out some options that make sense financially, for you and your family. I'll simply present those various options to you, and from there, you let me know what's comfortable, what's affordable for you, and then basically we'll simply just submit a request for coverage.
Gotcha.
Perfect, Mary. Alrighty, so, when you go to buy a home, there's 3 types of insurance on the home. So number 1, there's private mortgage insurance, which is PMI. So basically, all this is something the bank requires on their end if you put less than 20% down, but does nothing for you and your family, and simply put in place to protect the bank. The second type of coverage, as I'm sure you're familiar with, is the homeowner's insurance. So this protects the physical property of the home in the event of, God forbid, a flood, a fire, anything happens to the physical structure of the home. And most important type of coverage on the home, Mary, is the mortgage protection, which is what we're going to be talking about today. So this covers you, God forbid, when you pass away, so your family's able to have that period of time to get things figured out. Does that make sense?
Yes, that makes sense.
Gotcha. Okay. And then, Mary, so just so you're aware, so mortgage protection isn't something you can just sign up for at any time like life insurance. It is something you do actually have to qualify for. So basically, all that means to you is once we go to submit a request for coverage, there are 3 pieces of information required on the application, just like any other insurance app. So number 1 is going to be your driver's license to confirm your identity. Do you have it on hand?
Yes.
All right, perfect. And second type, Mary, is going to be your social, because that's how they're going to check your prescriptions and your medical history. The main factor in if you are approved or declined. And then third and finally, either a bank statement or a voided check, because they do need to make sure there's no prior insurance fraud, money laundering, or anything else illegal linked to your account. As well as, of course, that's how we're going to be paying for the policy. God willing, we can find a company that's willing to approve you. Does that make sense?
Yes, that makes sense.
Okay, awesome. All right, Mary. So jumping into it here, it looks like I have you 68 years young.
Yes.
Perfect. Alrighty, Mary. And you a smoker or non-smoker?
Oh, no, never.
Okay, gotcha. Alrighty. And then how much is your monthly income?
$3,200 a month.
And then do you currently have any sort of life insurance in place? Anything like that?
Oh, yes, I do.
You do?
I have a $10,000 policy.
Gotcha. 10,000. Is that just kind of to cover the burial and final expenses?
Oh, yes.
Okay. Understood, Mary. Understood. Alrighty. And then, 401k, IRA, stocks, bonds, anything like that?
No.
Alrighty. And looking at your file here, it's looking like we owe about $80,000 on the mortgage.
Yes.
All right, perfect. And then did you get your house appraised? Past complete? Okay, you did. Okay, what was the appraisal value of the home?
I believe it's around 180.
Got it, 180,
Mhm.
180,000. Oh wow. Okay. So you have quite a bit of equity in the home then.
Yes.
Gotcha. Okay. And Mary, how much are those monthly mortgage payments?
$800 a month.
800?
Yes.
Okay. Sounds good. And that's a 30-year?
Yes.
Okay. Perfect. All right, Mary. And then how long have you lived in the home?
Oh, I've lived here for 20 years.
Oh, wow. 20 years?
Yes.
Oh, wow. Okay, so quite a while. Understood. All righty, Mary. And then jumping into the health, what are your health issues?
I had a heart attack.
So you had a heart attack?
Mm-hmm.
Okay.
Diabetes.
Gotcha. Heart attack 2 years ago. Oh, shoot. That's really recent. Okay. What do you take for that?
Furosemide and amlodipine.
Oh, wow. Gotcha. Okay. Alrighty. And then you said the diabetes as well?
Mm-hmm.
Yep.
I'm on insulin.
Oh, and you're on insulin?
Mm-hmm.
Gotcha. Alrighty, Mary. And then it looks like we're putting your son Johnny as the beneficiary here.
Yes.
Okay. Gotcha. So, all right, Mary. So before we go any further, so a few things I want to point out, and you guys will see this in the mock presentation process. But number one is you want to acknowledge and let the client know as soon as possible that we're not covering the entire mortgage. And I mean, I don't care. I've ran 6,000 appointments at this point. Doesn't matter how young, how old, what the situation is. 85% of the time, we're not covering the entire mortgage. But obviously, in an equity protection, we're definitely not. Once you've gotten the health and you know that it's going to be an equity protection, let them know ASAP. And what you say is, all right, John, so as I'm sure you're already aware, because they are, trust me, they're not stupid. Clients will BS you, just fair warning. So John, as I'm sure you're aware, if we wanted to cover the entire mortgage here, that would be about another mortgage payment, which obviously don't worry, none of my clients do in your situation. What we are going to do today is we're going to put together an equity protection plan. Has anybody walked you through how equity protection works? And then secondly, notice how I ask. I tell him we're going to put it, I'm assumptive, I tell him, but then I'm simply asking to open him up. Like, hey, has anybody, walked you through that? Now when I ask and I'm opening him up, now he's more receptive. He's like, well, no, nobody has it. So after that, I'm like, all right, John, so it's basically a much more practical, much more affordable approach to protecting the mortgage. Why do I say that? Well, clients, no matter how young or old, but especially older clients, what are they afraid of? They're afraid of getting scammed. They're afraid of being sold something they don't need. They're afraid of being upsold. So when I use track words like practical and affordable, especially older clients, they eat it up. My goal with you and the rest of my clients is to solve the maximum amount of your needs with the least amount of insurance possible, and just letting them know that. And then after that, you follow it up with, well, it's different for every client in their situation, so let's figure that out. And then last part is like, they're like, oh wow, so he's designing a plan specially tailored to me and to fit my needs, my goals, my budget, etc. And then again, just being good at sales is asking all those intentional questions. So you start rattling those off, as you'll see in the presentation. What does that look like? Who's the home going to? Do they plan on selling it? Do they plan on keeping it? So on and so forth. And then after that, no matter the situation, you can basically be like, all right, guys, so really the most amount of insurance that we would really need is simply between 1 year to 2 years of mortgage payments to allow your daughter Jennifer to get the house cleaned up, cleaned out, put on the market, and eventually sold. As I'm sure you're already aware, if we wanted to cover the entire mortgage, that would be closer to another mortgage payment.
Oh, goodness. I cannot afford that.
Yep. So don't worry. None of my clients do that in your situation. So what we're going to do today is we're simply going to look at putting in place an equity protection plan. Has anybody walked you through how equity protection works?
No, this is my first time.
Gotcha. Okay, well, it's pretty simple. Basically, Mary, it's just a much more practical, a much more affordable approach to protecting the mortgage. And it's different for every client in their situation. So let's figure that out. So God forbid, let's say something happened to you yesterday. What would that look like today in terms of the home? Who would it be going to?
Oh, that'll be my son, Johnny.
Okay, your son, Johnny. Gotcha. And then would he be staying in the home, or would he be moving in? Would he be selling the home?
Oh, he's settled in Texas. I think he would probably just sell the home.
Oh, he lives down in Texas.
Yes.
Okay. Gotcha. All right, Mary. Well, before we go any further, I'm obviously here to help and serve you and, figure out some sort of protection for this home and for your life, because this house is obviously your biggest asset. And, of course, we want to do everything we can to make sure that we protect and preserve it, because you've lived here the past 20 years of your life. And you've raised your kids here, and you've built up some great memories in this home. I mean, but honestly, Mary, with you and, the majority of my clients, my goal is to simply solve the maximum amount of your needs with the least amount of insurance possible. That's really the goal here today.
Okay.
And, looking at the situation, I mean, honestly, really the most amount of coverage that we'd really need is simply anywhere between a year to 2 years of mortgage payments. Because you have to realize the number one goal is to protect and preserve the $100,000 of equity that you have in this home, that you've worked the past 20 years to build up. That's the number one goal today, is protecting and preserving that. And we're going to protect that by giving your son enough time. When God forbid, when you pass away, that's going to be one of the worst days of Johnny's life. And of course, he's going to have to mourn, to grieve, to recover. And then secondly, in terms of the home, he's going to have to take time off of work, fly up here, and he's going to have to get the house cleaned up, cleaned out, put on the market, and eventually sold. And we simply just want to make sure that he has that grace period of time to do so, and he has time to get things figured out, just so he's simply not forced to fire sell the home for $10, $20, $40,000 less than what it's fully worth, because he can't afford to keep the mortgage on the market. Does that make sense?
Yes, that makes sense.
Gotcha, Mary. So what we're going to do here, like I said before, is we're simply going to look at between a year to 2 years of mortgage payments to allow him that time to get things figured out, move forward in a healthy manner, and get the home cleaned up, cleaned out, put on the market, and eventually sold.
Gotcha.
So give me about 2 minutes here. I'm going to run through some options, and then we'll be able to look over numbers.
Okay, understood.
All right, I'm going to place you in a brief hold.
Mm-hmm.
And in closing, pay attention to the way I say that, where I say it in a very practical, conservative, casual manner, where I'm like, really, John, I mean, looking at the situation here, I mean, this is really about the most insurance you'd really need. And when you say it like that, and you show the client that you're on their side, you have their best interests at heart, and you're just trying to look out for them and put the minimum insurance in place to solve the maximum amount of their needs and not sell them some crazy large policy, and you approach with that posture, you'll be amazed by how many clients you're truly able to help. All right, perfect. Mary, you still with me?
Yes.
All righty. Awesome. So I've got 3 options laid out for you here. And out of these 3 options, I'm going to have you write down simply to let me know what's most comfortable for you, what's practical, and then from there, we'll submit a request for coverage. Does that make sense?
Yes, that makes sense.
All right, Mary. So first of all, first thing I'm going to have you write down is write down equity protection plan. Let me know when you get that. Alrighty. And then write down equity protected, 100,000. Perfect. All right, Mary. And then the three options we're looking at here. The first option I'm going to give you is going to be 2 years of mortgage payments. All right, so write down the 2 years of mortgage payments for Johnny. All right, perfect. And then looks like if you were to get approved with that, that would be $212 a month for the 2 years. Let me know when you get that. All right, awesome. And then Mary, the second option we're looking at is going to be 18 months, year and a half. Perfect. And then if you were to get approved for that, that would be $140 a month. All right, perfect. And then Mary, lastly, last option is we're going to look at a year. Because we're down a year of mortgage payments for Johnny. And then if you were to get approved for that, looks like that would be $80 a month. So out of these three options, Mary, if you were to get approved, what makes the most sense to you?
The 12-month, a year's worth, yes.
Okay. Gotcha. Go with the year? Okay. Alrighty, well, grab your driver's license for me, and I'll see if I can get you approved.
Oh, sweetie, I have to find that. Haven't driven in years.
24 hours later.
Alrighty, Mary. So we're just wrapping up here. And, just so there's no confusion, you still have that pen and paper handy?
Yes.
Okay, perfect. So I'm going to have you write down the details of coverage of what we're applying for today. All right, sounds good. So first of all, write down equity protection plan. All right, perfect. And then that's going to be equity protected. Write down equity protected, 100,000. All right, Mary. And then that's going to be write down, we're putting in place a year of mortgage payments. So write down 1 year mortgage payments. All right, awesome, awesome. And then that's going to be that $80 a month. And that's going to link right up to your Social Security on the 3rd of the month for you. So the bill date would be the 3rd. All right, yep, write down 3rd bill date. Perfect. And then that's going to be with Americo Insurance. It's like America, but with an O at the end. So Americo Insurance. Yep, they're an A-rated company. Been around for well over 100 years. All right, perfect, Mary. And then at the beginning of this call, I had texted you over my digital business card. So again, make sure you got my number saved in your phone, okay? And my contact. So simply save me in there as Jonah Insurance Guy, whatever works best for you. I'm also going to have you write down my number, just in case you lose that contact, next to the coverage information. Yep. Again, write my name down. So Jonah, it's going to be Jonah, like Jonah and the whale. Alrighty. And then my number is going to be 605 area code. Yep. 123 4567. Perfect. Okay, Mary. And also, I'm going to be your direct point of contact from here on out. So anything you need, regarding the coverage, if you have any questions, you need to make adjustments, simply either give me a call or shoot me a text, and I can be more help than waiting on hold with the insurance company for an hour.
Thank you so much.
Yes, ma'am. And then what I'm going to have you do is I'm going to have you, as soon as we get off the call, text my contact to Johnny and make sure you let Johnny know that I'm going to be the one to get a hold of, God forbid, when you pass away. And I'm the guy that's making sure that your son's taken care of and you guys are paid out fast.
Thank you so much.
All right, Mary. And then I'm also going to give you a security code to write down. Let me know when you're ready for that code. All right, perfect. So that code is going to be JL2520. And if you could read that back to me.
JL252.
Perfect. All right, Mary. And then, basically the office, they have us give you that code now because, there's a lot of, unfortunately, in the world we live in, there's a lot of scams going on. AI, artificial intelligence, is getting crazy. So I need you to keep that code safe. Keep that code with the policy. And so if anybody calls you claiming to either be myself or be from our office and they don't have that code, you're going to need to hang up on them and make sure you block their number because they're either trying to scam you or get information.
Oh, terrified.
All right, perfect, Mary. And then look out for that policy. So you're going to be getting that policy in the mail in the next 7 to 10 business days. So if you don't get it, give me a shout. We'll get another one mailed out to you. You know how snail mail can be. But you will be getting that policy. So look out for that.
Yes.
Yep. Obviously, when you get the policy, keep it safe. Safety deposit box in your safe, under your mattress, wherever works best for you. And then let me know if you have any questions.
Oh, no more questions. You are amazing, Jonah.
Perfect. So, all right, Mary. And then I'm also going to give you a call a year from now, basically to re-explain your benefits, re-explain the policy, make sure everything makes sense. But in the meantime, like I said, if you do have any questions, if you need to make any adjustments, I'm simply just a phone call away.
Thank you so much.
Alrighty, and then any questions or any concerns or anything else regarding what we went over?
Oh, no more questions. You are amazing, Jonah.
Alrighty. Well, it was a pleasure meeting and serving you, and you have a blessed rest of your evening.
You are a blessing as well. You have an amazing evening.
Alrighty, yes ma'am.